Welcome to the Multifamily Investor Nation podcast. I'm your host, Whitney Elkins Hutton, the Director of Investor Education here at PassiveInvesting.com. And with us today, we have Harry Nima Zegarra. Harry, thanks so much for being here with us today. Welcome to the podcast.
Hey, Whitney. Thank you so much for having me. I'm very excited.
Absolutely. But so before we dive into your deal, which is the Monterrey Apartments, 105 units in Dallas-Fort Worth, Texas, let's talk a little bit about yourself. Tell us a little bit about your background, how you got into multifamily investing, and where you're at now.
Yes, for sure. So my wife and I, we're actually both from Peru, from South America. We're both physicians. We came to the US about 15 years ago. And just about 5 years ago, we came to Dallas-Fort Worth, and we decided to settle here. Just after we came here, we decided to jump into real estate, because we have heard about this for a long time. So initially we were in residential real estate. We were acquiring properties to a point where we decided about 2 years ago to jump into commercial real estate, specifically multifamily syndications, right? In the last 2 years, we have been growing and again, mainly on the equity part of the business. But in this case, I mean, we are actually a lead sponsor. So we're very excited about that deal.
Awesome. Well, let's dive in. I want to hear all the details about it. So, okay, just to recap, we've got the Monterrey Apartments, 105 units, Dallas-Fort Worth, Texas. So let's start at the very beginning. When did you close on this deal?
Yes, actually, we closed last year, August 2022.
Okay, so you are no stranger to the whole interest rate run-up hikes.
Absolutely.
Sure.
I mean, actually, it was the time, and I always tell this story, from the time we went into PSA to the time we closed, there were about 200 basis points increase. So it was very exciting, stressful, and also very, something that we learned a lot with that.
All right, well, we'll get to that piece. I want to hear all about it. But let's start at the very beginning. So you closed in August 2022. When did you find the deal? How did you find it? And, just kind of walk us through, how did you know that this is the deal that you wanted to put an offer in on?
Yes, absolutely. So actually, I'm part of the lead sponsorship team. So we closed this deal with my two partners. And so one of them was actually a limited partner with the prior ownership. So we had a little bit of inside information about this project, right? So even from last year, I think he heard something about in November 2021 that they were planning to sell the property. So we were following that closely. And again, with my two partners, we have worked before in another property, and we have a very good working relationship and friendship. So we decided to pursue this one. So actually in February, we heard still a property was an off-market property, and they decided to put the property on the market. So we actually got that information beforehand, and we were actually able to do an initial pre-listing tour to the property, which was great. So that was that visit was around March 2022, and after a couple of weeks, the property came into market, and we also put an LOI around that time.
Okay, so you got to do a little bit of tour. You put in an LOI. Were you the only group that put in an LOI, or were you competing?
No, we were competing actually. Around that time, is still there was a lot of competition. It was very different than now. We actually went to a second round and best and final. Right, so initially we submit the LOI between that and the PSA or the LOI that was accepted. It was about 3 to 4 weeks because it was a second round. So we were the one of the 3 groups that went to that, and and at the end it was very interesting. Our offer price was the same as one of the other groups. However, because of the prior relationship with one of my partners, and also one of the key principals was also well known by this group, we got the deal.
Okay, so what did you guys offer on the property?
Yeah, so our initial offer was 14.5 million. And the purchase price was 14.8 million.
Okay, so a little bit of negotiation there, it sounds like.
Yeah.
But how did you set yourself? What did you put in your offer? How did you structure it that allowed you to beat out the other offer at the exact same purchase price?
Yes, so it was again like a $14.8 million. We had like around 3% earnest money deposit with 1.5 after PSA agreement, and the other 1.5 3 weeks after that, right? Like after we had done our due diligence, right? Like and we were supposed to close in 2 months with a 1 month extension. At the end, like as I was mentioning, like our offer was very similar to the other offer who was competing with us. It was, I mean, we're grateful that at the end it was like the relationship that we had with the seller and also with the broker, like when we took the property that got us in front.
Okay, so the relationship is kind of what set you guys apart.
And it's very
All right.
important.
Okay, so you gave us a little bit of insight on the structure of the offer, but let's just recap. You had 1.5 million. Was it hard down at the very beginning?
No, it was 1.5%. So like the
Percent.
total
Okay.
was 3%. So it was like like around 200K like at the beginning, and 3 weeks later it was another 200K.
Okay, and then so you had 3 weeks, and then how long did you have to close?
We had 2 months with 1 month extension.
Okay. So, all right. So did you guys have to go back and forth at all? Like, because you started at 14.5
Yeah.
and you ended at 14.8. So how many rounds did you have to go through?
Yeah, it was 2 rounds, right? Like so, and like and again, like actually 14.8, it was our max offer. We couldn't go higher because of our numbers initially, and we mentioned that to the seller and to the broker, right? Like so, and that's like the point where we got the agreement.
Okay, awesome. Okay, so let's talk a little bit about due diligence before we talk about the financial piece. So
Yes.
you had already toured the property. So what did you do during due diligence? Did you walk every single unit? Like, how did you conduct that and get it all done in 3 weeks? And were there any surprises?
Yes, yes. So like initially, so when like the first time we went, even like before like the LOI was submitted, we went there and we just checked like 3 or 4 units. One of them was occupied, so we asked like for the permission of the seller, and he was okay with that. So then after our LOI was accepted, so we had like the 3 weeks, right? Like so we hired a third party inspection company like to do all the physical due diligence with us, right? Like and the good thing about that was that again, like one of my partners is from Austin, and I'm local here in Dallas Fort Worth, so we were able to be physically like during like the due diligence inspection, right? Like so the third party inspection company, so they usually do 100 units per day, right? Like so they were able like to do all the inspection in just one day of labor. So they inspected actually all the 105 units that they took like thousands of pictures, and we were able also to do the same day like the rents audit and the financial audit of the property.
Okay. Were there any surprises that came up during the due diligence process? Like
Uh,
roofs, plumbing, anything like
yeah.
that?
Yeah, so what we found, yeah, so we found a couple of things that, so for example, like the water fees had increased, like the bills had increased in the last couple of months. Also, we saw like a couple of times that they were getting like to bring like the plumber like to the property because of some problems, and they were adding some extra expenses to the property, right? Like so when that happened, so we brought like this inspection company, but we also brought experts on that, right? Like so we were like a different plumber, and we would and we want someone like to check on the pool. Unfortunately, there was not that much to be done. Like I mean, it was more like deferred maintenance on that case. So but however, we put that in our underwriting for in case we needed like to do any extra like repairs in the future for that.
Okay, so you did identify a few things, and did you retrade or did you just put it into your capex budget or your underwriting?
Yes, so we added that to our capex, right? Like and again, like fortunately, like as we brought like the other inspection people, right? Like the plumber and like the pool company, they didn't find like any big problems, right? Like it was just more like I think like about like a maintenance thing.
Okay. So, and did any of that affect your ability to get insurance?
No, actually not. Like I mean, like insurance is another whole different story, right? Like, and
Well,
as
tell us
we
the story.
like as we have experienced, like again, like I guess, like like especially like in Florida and Texas in the last year and a half, right? Like all these rates increasing like incredibly, right? Like so, yeah. So that was like part of like our of the journey, right? Like so we initially like so like in the 212, like around like the insurance was like per door, I believe, like in the low 500s, and we were trying to be conservative, right? Like and put like extra like the research like for that, like so we put around like the 700, but actually it came out like to 800 per unit, right? Like so yeah, it was like another pleasant surprise in that moment, but fortunately we had other safeguards in place, like so we were able like to adjust our numbers for that.
Okay. Well, tell me about the financial due diligence. What were you able to get from the seller and how did that go?
Yeah, no, like they were very open. That we didn't have any problems on that. It was very smoothly. Like again, as I mentioned, like like every all these independent inspection was done in 24 hours. I mean, and actually, as we at some point decided to keep the prior property management company, so we decided we couldn't do like the financial due diligence with them, right? Like as a property management company that they were involved in the prior administration. So we decided like to take like an independent inspector on that, right? Like, but because we were continuing with them, with us, they were very open and they were helping. So again, like it was very smooth actually.
Okay, so it was to their benefit to be as transparent as possible, it sounds.
Yes, exactly.
All right, so let's talk about the financing on this because you put it under contract in March and you closed in August
Yes.
of 2022, a historical year for interest rates. So talk to me, what kind of lending did you use? Rates, lockout periods,
Yes.
prepayment periods, give us kind of the lowdown on that.
Yes. So, so you can imagine, like, so we signed the PSA in late April. We were supposed to close with extension in June, July 2022. We actually ended in August, right? Like, and the interest rates are part of the reason for that, right? Like, so there was a lot of uncertainty in the market. Many lenders were pulling back. Many lenders were not doing initially loans at that moment, and many lenders were taking even longer to take a decision on those loans, right? Like they were doing like which is expected, of course, right? Like they were doing extra due diligence on their part too, right? Like so, so at the end, like as I was mentioning initially, our interest rate went up like 200 basis points in just like from the PSA until we closed, right? So we needed like to do all those adjustments, right? Like so, and how it affected our projections was like again like from going to a business plan of 5 years, it went up to 6 years, but still it was like an acceptable like business plan and time, right? Like
And
so.
so, and what
Yes.
kind of, so how much, loan to value did you get or loan to
Yes.
cost?
Yes. So the price was 14.8. We got like a bridge loan, like with 75 loan to value. And the reason for that was also because we had a capex, like an important capex of almost 900K. And we needed so also extra like the reserves, right? Like for extra things that we would need, like to work on the property. And I mean, of course, we bought like interest rate cap in that moment. That, as you can imagine, it was going up and down. For some properties, it went up like to 300 or 400K. In our case, it was not that bad actually. We were able to secure. So our base or floor interest rate was about 4.5, and our interest rate cap was a strike at 2.75. So which means like at 7.25, it was start gonna kick in. So and actually when we closed, we were already at 6.8. So we were very close at that moment. So yes.
Okay. So, and then were there any lockout periods or prepayment penalties? I mean, you mentioned that this is a bridge loan. Like, is your
Yes.
intent to refi or sell in a short timeline?
Yeah, no. So again, like so the interest rate cap. So and this is the funny thing about this, because we were modeling this every single week, like because all this was changing, and of course like the rate caps like changed every single day, right? Like so yeah, no. So our model initially was to refinance at year 3, which again, like just modeling how the interest rates are going, we expect that the interest rate at that point is going to be kind of similar or below how we started. And actually, we model our interest rate for the first 3 years at 7.5. So if you think about like, and the rate cap kicked at 7.25, we are still in a very good place still.
Okay. Sounds great. Okay. So, and you said it was 75% loan to value. And so
Yes.
there's an extra 25% and including the CapEx budget here. So did you raise to complete the funding on this deal?
Yes. So we did like in the model of a syndication, right? So yeah, so our minimum to close was about like 5.8, right? Like so, and with extra again capex and working capital and reserves, it went up like almost to 6.6 or 6.7, I believe.
Okay. And then how did you structure this with your investor base?
Yes. So with my partners initially, we divided like everything like in equal parts. We also had like our KP slash senior slash mentor who also got like an important part of the GP shares. And also we brought like also other members like in the group like to help us with small tasks, but also with capital raising, right? Like so, and from there, like we brought the investment or deal like to our investors, right? Like and I think you were asking about how we structure like for them, right? So it's kind of like so we did like an 8% pref, okay, and we and after that is a 70-30 split.
Okay. And all right, so I want to talk about the GP structure a little bit because I think historically people on the podcast have heard maybe 1, 2, 3 partners, they divide everything equally. Maybe there's a KP at 10%, but it sounds like there's more people participating in the general partnership structure here. Yeah. So can you give us what details you feel comfortable giving us on how you broke that down and who took what role? And really, at the end of the day, people need to understand it takes sometimes a village to take down one of these properties.
Absolutely. It's I mean, after this deal they have done with partners being like the lead sponsorship, I have a great deal of respect for all the people who do this like every single day or every month. So it's kind of like a business standard, like in general, like so how we do these shares like for people who raise capital. So it's also like around like the 30 to 35% of the general sponsorship team, right? Like so and after that we divide with other like smaller roles.
Okay. All right. So how did you structure the fees for this deal? Did you take any fees?
Yes. So as the general sponsorship team, like is usually like 2% acquisition fee of the purchase price, and 2% asset management fee from the gross rents. We don't take any fees for refinance or for disposition.
Okay, awesome. All right, so kind of wrapping up here. Were there any other issues that came up through this entire process that we haven't covered?
Yes. So, well, like again, as like the main thing was the financing part, right? Like again, like just try to do every week to reassess our assumptions and put the input from the lender, different rates, and trying to navigate with the rate caps and all of that. Yeah. So so as you mentioned, it's we're in a very interesting time that hasn't happened probably in a long time. So we learn a lot with it.
So I want to be really specific here because,
Yes.
people are like, pulling out a calendar. They're like, wait a second. Yeah. 30, 45 days for, due diligence, 30 days to close, 30-day extension. That calendar does not add up because you closed in August.
Exactly.
So how did you all this is happening and it sounded like it's mostly contained to the financing piece. How did you bridge this conversation with the seller? And how did you structure the arrangement to be okay with extending to close into August?
Absolutely. Yes. So I mean, we're very grateful that again we had a relationship with the seller. The seller was also very educated like in this and what was going on like in the financial market, the same as the broker, right? Like so we actually needed like to get one extension like that was still in the contract like and we needed to put an extra 50,000 K like in like earnest money. But also, if you think about that, that would have finished in July, like the second part of July. So we needed to ask for another extension, and it was just not mainly again like because we had a problem with the capital. It was just mainly a problem with the lender that were delaying, and actually, I mean, all the underwriting that they did like took longer, just took longer. But fortunately, we had this good communication with broker and seller, and they really understood like because in many of the projects or deals that were going at the same time, there were, I mean, still a lot of retrades or many people that at some point even like lost money like as earnest money deposit. So we had all the intention to close, and we were very communicative like with them, and and at the end even like we had a full disclosure and communication like between the broker and the lender, right? Like, so there were everyone involved in that conversation.
Okay. Yeah. Communication's key, relationships key here. All
Yes.
right. So I think one more challenging question. It's kind of two
Yeah.
wrapped in one. So
Yes.
was there something that was easy that you found easy during this entire process that actually ended up being harder? And was there something that was harder that actually ended up being easier?
Okay. All right. So what it was easier for us, or at least for me, is like to work together with my two partners. Actually, it was like the first time that, so we had worked like before in another project, but not in this full extent as main and lead sponsors, right? Like, and you always like have your thoughts and doubts if it's gonna work or not, right? Like, so, but it was really great. And the other part is like to get the property under contract, even though we went to a second round for best and final, because of the communication and all of that, it was easier like to get the property. Actually, it was very so surprising. And the difficult part, again, like apart from the lending, is after closing is like the asset management actually, right? Like because it's not that easy as they used to be, like I guess like 1, 2, 3 years ago, right? Like you need to really work hard, and you need to be on top of the business plan, right? You cannot get behind it. So
Mhm.
yeah, a lot
Yeah,
of
the
learning.
fun's just begun once you close the property, right?
Exactly. Yes.
All right, Harry, thank you so much for sharing your knowledge and experience here with us today. If listeners want to find out more about you, where can they find you?
Yes, absolutely. So you can reach to us. We have our website and company, nimaequity.com. Nima is N as in Nancy, IMA. And we also love education. So we also have our YouTube channel, like with small like videos that we teach about like the basics to more advanced concepts in multifamily.
Awesome. Well, Harry, again, thank you for sharing your time here with us today. And we look forward to following you and taking a peek at your future deals on future podcasts.
Awesome. Thank you so much. I appreciate the opportunity.